Hi there. Welcome to Retirement Your Way. I am Debbi Marcum, and I would love to welcome my lovely co-host Jaclyn. How are you doing, gorgeous?
I am doing fantastic, Debbie. I
Wonderful.
mean, it's the sun is shining, the
hmm
spring is here, and of course, I get to talk to you today.
That's always a treat. One of my favorite parts of every week.
Me too. Me too. And I know that I feel like both of us are just going through a ton of stuff right now. And it's
Yes,
so nice to just take an hour with each other and just spend some time,
I
chatting,
agree.
talking about life. And then we get to do this podcast and we get to have
Uh,
fun with it. It's a nice break.
I agree, and there are things that we're passionate about, so that's one of my favorite things.
Hmm.
So,
Yeah,
well,
absolutely. Well,
today I'm really excited about today's topic. So, would you like to hear
okay,
what we're going to
let's
talk
hear
about?
more.
Well, we're going to
Yes, yes.
continue our fearless finances for women. So, this is probably going to take us a few episodes to get through this. So, this is episode 2. And last week, I talked about the importance for women to build a reliable income stream for retirement.
Mhm.
And one of those techniques is we're going to really kind of focus on. So, generally, when you think about building an income stream in retirement, those are things like personal savings, which men typically have saved more than women. So we're already at a twenty to $30,000 deficit compared to men in retirement. Distributions either from IRA or workplace plans, a pension. Hopefully, if you work somewhere and have a beautiful pension, that's a reliable source of income. Any annuity payouts. One of my favorite things for retirements. Inheritances, and then today's topic, Social Security, because that seems to be a hot spot. People are want to know a lot about Social Security when they come meet with me, and there've been quite a
Yeah.
few changes over the years with Social Security. So you need to know what is available, how it works, how to avoid things. The you want the biggest bang for your buck with Social Security.
Yeah. So, Debbie, I mean, I'm so glad that we're talking about Social Security today
Yeah.
because I think it's one of those topics that is consistently brought up or talked
Yes.
about, but no one really knows what it means for them.
Yes. And especially how it applies to women, because it often applies differently to
Mhm.
women than it does men. Uh, and, you know, as I was working, I knew I would be getting Social Security. I roughly knew the age when I would be getting it, although, you know, I made some right decisions because I had started working in this field and had learned what to do properly. I really believe that if I had not been in this field, I would have started drawing at the wrong age because I
Mhm.
just didn't realize how it worked. And I didn't have the tools then that I have tools, you know, now. For example, I have a
Mhm.
wonderful program that I can work for people that will give you the best time to start drawing retirement because it's different for everyone. And so I have a wonderful little program can do a wonderful report of, okay, if you wait until this age, this is what you're going to be drawing. If you wait until this age, you will have given up this much. So it's a great tool to have. But you really have to understand how it works before you can really get the biggest bang for its buck. So
Yeah, absolutely. So, how does it differ, Debbie? How does it differ between males and females?
well, primarily because women's work has often been interrupted. I mean,
Yes.
women often leave the workforce at least 8 to 10% more than men do, either because they have children, they're taking care of parents, whatever reason, or they've had to transfer because of the husband's job, and the wife may not have a new job immediately. So, you know, there are a lot of things that come into play of why women don't consistently work all the time, or at least not every woman does. And so,
Mhm.
therefore, they have not earned as much, throughout the years. So, I think the first thing that we need to do is how did they come up with what you get for Social Security? And so, for Social Security, to determine that, you need to have worked and paid taxes for at least 10 years. But in addition to that, you have what is called a work credit. And
Mm.
how the work credit is analyzed, it's considered a quarter earnings. And so you have to earn, right now, it's about $1,700, you know, and that's 1 credit. You can earn up to 4 credits per year. So right now it is, I mean, it's over $7,000 that they apply towards your Social Security. That's considered a work credit. So you have to have that 10-year period,
Okay.
and then you have to have, typically it's about 40 work credits, and then they apply that amount toward your Social Security. They look at your Social Security. Let's say you've worked more than 10 years and you are ready to retire. They will look to see what the highest earning 35 years are. So they look at a 35-year gap and they look at the highest years that you have earned. That's how they determine what your Social Security is. And how much you will end up getting. And then, of course, it's based on your age of when
Hmm.
you start drawing. Um, but that's pretty important. I had no clue about work credits.
Yeah,
I had no
I
clue.
didn't either. I didn't either. And
Yeah.
so, Debbie, you briefly just touched on, when you start taking it. Is there a certain
Yes.
age that you have to start taking it?
I mean, as far as my clients are concerned, I've never had anyone wait past the age of 70.
Okay.
Yeah.
Yeah.
So that's typically when. Now, when Social Security, when FDR, said Social Security would not be taxed, that changed. And so
Oh,
that has changed. Plus, it was initially designed to only replace 40% of one's, you know,
income.
funds and income.
Mhm.
And, I meet people on a pretty regular basis. That is their only source of income. And so we want to make sure that you are getting the most that you can because you've paid into it. Now, one thing you need to also consider is if you have received money under the table. For example, if you
Mm.
have received tips and you have not declared taxes on those and have not paid taxes on it, that's not going to impact your Social Security, at all. You're not going to get anything on that.
Mhm.
So the people that own their own businesses or they are getting under the table money, Social Security is not going to apply to them unless a spouse can end up
Mhm.
impacting them. And so that's another thing that we need to talk about is how does having a spouse impact you? So the good news is there's not a marriage penalty. So you can both draw on your Social Security, and that's beautiful
Mhm.
as long as both of you are living. The problem with that is once one of the spouses has died, you are going to lose one of those Social Securities, and depending on your age, you may not be entitled to their benefit at all. So, for example, if you're in your 40s and your husband's in his 40s and you lose your husband, you're not going to get his Social Security benefits when he passes away because you're not old enough. And so that definitely impacts, a lack of income when you lose a spouse at an early age. So, that can really hit you. But the good news is there's not a marriage penalty. There are some people that actually are due two benefits. Probably because they have two different careers or whatnot, and so generally you have to file for both of them,
Mhm.
and you generally receive the higher of those two. But sometimes they blend them. So having two, you just need to make sure that you have reported all of them. Just from personal experience, I've discovered going in person, setting an appointment, and talking to Social Security works better than doing it over the phone. Um, I have had clients that have been given incorrect information when it was done over the phone. And sometimes that's because, miscommunication. They just don't understand what you're asking. And I think being there in person, especially for a widow, or a
Mm.
divorcee, I think it's important that you go in person. That would be my personal advice and
Yeah.
experience.
Yeah.
Yeah.
Well, Debbie, so when you do take Social Security, and we typically say we want to hold off as long as we can, but you
Yeah.
will do that report with your
Yes.
clients, so then you can really figure out when it's most beneficial for your
Right.
situation, and it's not a one size fits
No,
all.
it is not.
But I think it's also, important to note, can you stop Social Security and like pause it?
No.
No.
I'm 99% sure you cannot do that,
Mhm.
because it's, for one thing, the chances of them making a mistake are just too great.
Yeah.
It's tough enough to stop and start your mail service.
Yes.
I can't imagine the difficulty with dealing with Social Security in that respect. So, but typically people need that.
Mhm.
One thing that I work with my clients closely on, though, is making sure that the income that they are getting from other areas, for example, from annuity payouts or inheritances, you need to make sure that that is done correctly, because if not, that can reduce your social security. So you don't want it to kick you into a higher tax bracket, and
Mhm.
therefore you have to pay taxes on a larger percentage of your social security,
Yeah.
because your social security is taxed. So
Oh.
that's one reason that a good financial advisor is essential. I think
Yeah.
I read a great article today in Is there a minimum of what you need in order to have a financial advisor? And it's not based on a dollar amount.
Mhm.
It is based on it is it is generally a good idea as an adult to have a good financial advisor.
Yeah. And
You may
CPA
have to
and a
CPA.
team, yeah,
I
with
agree.
your financial advisor and your CPA working together
Yes.
because, I mean, it sounds like taxes are just gonna be hitting you left and right when it comes to retirement, and so it's so important to prepare for that, not
Yes.
react to it,
I agree.
and taxes are a fundamental part in your retirement plan.
Yeah, they're not. And yeah, I was sharing with a gentleman today, and he said, I expected to owe less taxes after I retired. And that's not necessarily the case.
Mhm.
So, there are some myths involved when it comes to taxes and with Social Security. But I also want to mention something that a lot of people do not realize. They assume that once they have divorced, that they are no longer eligible for the Social Security benefits that the ex spouse has. And that's not the case. Because if you've been married at least 10 years, you are usually, you can usually access his Social Security benefits or her Social Security benefits if it's the reverse is opposite. Um, Even if they have remarried, and that doesn't take away from his or her current spouse. So if you've been married at least 10 years and you are divorced, when it comes to retirement time, when that ex-spouse retires, you are probably going to be eligible for his benefits as well, depending on your age. I mean, at 60, you're going to probably a widow's benefit, for example, which is similar to a divorce situation. At 60, you are going to be eligible for about 71% of the
Mhm.
if they are 60 when they passed away, and then
Mhm.
if you're old enough, 100% at full retirement age, though. So widow
Wow.
benefits, you're going to get the higher of the two, which generally is the male,
Yeah.
has earned more income over his lifetime. Not always,
Wow.
but
I mean, that's such a positive because I
yes.
feel like when we talk about widowhood and being divorced and all those different aspects,
Yeah.
it seems like you're always down, right? I
Yeah.
mean, but then now it's like there's a positive to it, and there
I
can
agree.
be. But Debbie, let's go back to maybe explain, now that we know Social Security, now we know how it can be different for women versus men. What can we do about it? What can our listeners and viewers take away from this episode? And maybe what's step number one that they can do now?
A great place to start is actually with the Social Security office, and you can do this online. Just go in, and they will do what is called a PIA, which is a report of what's the anticipated retirement money that you're going to get at 62 versus 67 versus 70. So you can compare it. Now, that's going to be based on what you're earning at this point in time. It's going to change if you suddenly start making less money, if you start making more money, but that gives you a good estimate of, okay, I think this is what I'm going to be getting from Social Security. But more importantly, it is you need to start planning for retirement early. As
Mm.
soon as you start your career, you need, I tell people, especially young couples, pay yourself first.
Mhm.
Start those IRAs, start a Roth if you can. Get with a good financial advisor and map out what your goal is for retirement. And it may change, but you need to at least have a goal in sight. This is where I want to be at a certain age. This is the age that I would like to retire, which is one reason why you need a financial advisor. If you want to retire before the age of 62, you definitely need a financial advisor to help you get there. And then they can also help you map out, okay, is this what you really think retirement is going to look like? And if not, go back and look at our podcast on planning for your retirement so that it actually ends up being what you anticipate and not an endless vacation.
Yeah, absolutely. And what we like to say is yesterday was the right time to start thinking about
Yes.
retirement and,
Yes.
planning ahead. We talked a lot today about social security,
Mm-hmm.
taxes, how it's different for women. And I think it's so important to fit all of this into one picture. And I'm so glad we're doing different parts to this series
Yeah.
because each part is its own unique show in a different way. Will give you women guidance on
I agree.
what might be right for them and how it's different. So,
I agree.
Debbie,
I think if
how
we hit it
can
all at once, it'd be too much to absorb.
absolutely.
Baby steps.
Debbie, how can our listeners and viewers reach you?
The best way is to call my office at 866-247-5695, and Andy will be happy to set up a visit with me. But you can also find me on my website, which we're getting ready to update on my Facebook page. But more importantly, I think you should check out our YouTube. Someone told me today, my favorite is seeing the YouTube. But for those who typically listen to podcasts in the car, Spotify, Apple Music, those are also great avenues to reach it as well.
Yeah,
But we'd love feedback.
let's not watch the YouTube while we're
No.
driving, but we'd love for you to watch it when you're at home.
Yes. But we
uh,
would love suggestions. I mean, we get our best ideas from others that we work with, and so that's
yes,
my favorite.
yes. Yes, listeners and viewers, please subscribe so you can be
Yes.
notified as soon as a new episode is out. And like Debbie said, we'd love to hear what you want to hear about next and what you want to learn more about or what questions you might have. And we're happy to join that or have that in a new episode for us. So
Yeah.
thank you, Debbie. It was a pleasure to
Thank
talk
you.
about Social Security today. And that does it for this episode of Retirement Your Way with our host, Debbi Marcum.